Joining us to talk a little bit about all the triggers for the housing finance market is Keki Mistry of HDFC Limited. He's here with us on Bloomberg Quint. Good morning, Mr. Mistry. Thanks so much for joining us. Let me just start with that broad question and then get into specifics. What do you think are the drivers for demand this year in terms of housing finance, also for interest rates, which are on the uptrend?
Well, first of all, demand is clearly looking good, and demand has been looking good for a while now. So even in the last 3 years or 4 years when people were talking of slowdown in real estate, we frankly didn't see that slowdown, and we saw the demand for individual loans continuing to remain strong. There are pockets in the country which are not doing that well, but these are just 2 or 3 stray pockets. If we leave out those 2 or 3 pockets, in most other parts of the country, the growth has been very good. Now, as far as interest rates are concerned, yes, rates have gone up compared to what they were 6 months ago. But you must always bear in mind the fact that in February and March, interest rates tend to be much, much higher than what they normally are. Now, there are a couple of reasons for that. The first reason is that the government's financial year ends on 31st of March, and whatever is the government's budgeted expenditure for the year, they tend to spend a significant part of that money by the time you come to December, January. And therefore, there is that much limited amount of government spending that takes place in February and March. The other reason is that 15th March is the date when 40% of the taxes of the year, irrespective whether you're an individual, you're a company, you're a businessman, whatever you are, 40% of the taxes of the year are paid on 15th of March. So suddenly a huge amount of liquidity gets sucked out of the banking system. That money goes into government coffers. The government doesn't spend that money right away, but the government starts spending that money as you get into the new financial year, which starts from 1st of April. So typically you find that rates tend to ease a little bit as you get into April, May, and tend to remain at the highest in February and March. But having said that, there is no question of a doubt that interest rates have gone up a lot compared to what they were a year or, for that matter, even a year and a half ago. But if you compare interest rates with what they were 2 years ago, then rates are still lower than what they were 2 years ago.
So in essence, Mr. Mistry, you are suggesting that rates will probably not be a key determinant of the way demand shapes up in the next year. And actually you always maintained that property prices and outlook for property prices are a bigger determinant for housing finance.
I would say 2 things. I would say interest rates not very relevant not as relevant as one would like to think or one would believe. The reason being that there are fiscal benefits on housing loans. The interest that you pay on a housing loan is tax deductible up to a certain limit. That limit is 200,000 rupees or 2 lakhs of rupees a year. So the headline interest rate, whatever be the headline interest rate, you don't actually end up paying that kind of rate because there is a tax benefit that you are getting. The more the interest that you pay, the higher will be the tax benefit up to that limit of 2 lakhs rupees. So therefore, for a person taking a loan of, let's say, 25 or 26 lakhs, which is a typical loan size, the effective cost to a customer, if you set off the tax benefits, the interest deduction and the principal deduction, will work out to less than 4%. So therefore, interest rates don't make that much difference. I think the most important thing are 2 things. One is property prices and the other is the outlook on property prices. So even when prices are low, if consumers believe that property prices are going to keep coming down in that kind of an environment, people wait to buy a house. But the day you feel that property prices are bottomed out, and in my view, property prices are bottomed out in pretty much most parts of the country, the day you feel that property prices have bottomed out, that is the time that pent-up demand which gets created when people don't buy a house, that pent-up demand gets satisfied. So you see a flux of people coming in to buy houses at the first sign of property prices going up. We saw a little bit of that happening in 2010. 2008, 2009 was a very weak period for global markets arising out of the Lehman crisis. And then in 2009, middle of 2009, things started looking better. Companies paid a lot of bonus in December 2009, making up for the fact that in 2008, most companies did not pay bonuses. And therefore, the period from January to March 2010 saw a massive flux, a massive increase in the number of people going to buy houses. And that also caused property prices to go up.
Is there pent-up demand in the market at this stage? Because again, over the last couple of years, demand has flattened out for a number of reasons and prices have all been coming down. Is there pent-up demand, sir?
Well, my sense is that if you're talking of property prices, I don't really see property prices going up in any significant manner for the simple reason that supply has increased a lot. So whilst demand remains strong, supply has increased in a very big way. So with supply increasing, demand, the supply matches the increased demand, and therefore my sense is prices will remain more or less stable for a period of time. Having said that, a slight upward bias in prices to sort of keep pace with inflationary increases in the economy, I think that is something which one should expect. But I don't think we will see any tearaway or runaway increase in property prices.
Right, Mr. Mistry, I noticed that you're sitting against the backdrop of a poster of the Prime Minister's affordable housing scheme. Is the lower end of the housing finance market becoming a bit more interesting to you?
They always were, to be honest. I mean, our average loan size is 25 lakhs. Now, 25 lakhs, if you take Bombay as an example, our average loan size in Mumbai is 40 lakhs. 40 lakh loan would mean a property value of around 65 lakhs. Now, you tell me in the city of Mumbai, where will you get properties of 65 lakhs? So, it's all in the outskirts of the city. So, yes, it does, this kind of low income lending does appeal to us. But we do lending based on the income of the individual and not based on property values. If you look at the period up to December, and I'm only going to talk of numbers which are in public domain, which is the period from April 2017 to December 2017, the loans to people in the lower income group and the economically weaker section constituted as much as 37% of our total loans in terms of numbers. And in terms of value, it was almost 20%. So 1/5 of our lending in value terms is to people in the lower income group and the economically weaker section. So yes, it's a big opportunity for people at this point of time. The government has been very focused on providing fiscal benefits. In addition to fiscal benefits, also providing the subsidy scheme to home buyers who are in need of who are in the economically weaker section. So there is a subsidy which is being provided, which effectively reduces the cost of taking a loan significantly. And the subsidy amount discounted to its present value is paid upfront to the lender. So let me explain to you how this scheme operates. There are three distinct categories of customers. People in the what they call economically weaker section, and the second is people in the what they call MIG1 and MIG2. Now in the MIG2, which is effectively the middle income group, the conditions that have been provided are as follows: that firstly, the customer concerned should not be owning any other property. Second is his income has to be less than 1.8 million rupees a year, or 18 lakh rupees a year, which is 1.5 lakh rupees a month. And the third condition is that the size of the property that he's buying, the size of the dwelling unit, should not be more than 150 square meters of carpet area. So if these three conditions are satisfied, then on any loan that you take to buy a house, on up to 12 lakh rupees of the loan, up to 1.2 million rupees of the loan, there will be a 3% subsidy which will be provided by the government for the life of the loan. Now, you can imagine that an income of 1,50,000 rupees a month is a reasonably decent amount of income, which a lot of people in the middle income group will have an income of lesser than that. And a property size of 150 square meters is also a fairly decent sized property for a middle income household. So this benefit actually applies to a whole host of middle income customers. And therefore, this is, to my mind, is one of the best times to buy property.
Mr. Mistry, are you comfortable though with the lending practices at the lower end of the market? I point you to a recent RBI paper which had said that at least in the absolute lowest bucket of loans up to 2 lakhs, the NPA percentage has been quite high in double digit. So broadly, the lending practices in this lower end segment, are you comfortable with that, sir?
Well, when we look at the loans that we have, first of all, we wouldn't have too many loans of 2 lakh rupees. So for me, it's a little difficult to answer that question. But having said that, we will have a lot of loans which are in the 10 lakh, 12 lakh, 14 lakh type of category. We've not seen any significant difference in the level of non-performing loans for that category of customers compared to people in the higher income group. And I guess the reason for that is that when we appraise a loan, we appraise the loan in a similar manner, whether it is a loan to a lower income person or a loan to a higher income person. The loan is always determined based on the repayment capacity of the individual, which has to be judged by us. So it is never based on property values. Now, a lot of the NPLs, and this is again my understanding, I might be wrong on this, is that a lot of the NPLs that have been reported are not really housing loans, but a lot of these will be loans against properties, which is very different from a housing loan. In a loan against property, and I'm not talking of the 2 lakh rupee loan, this would be a little higher value loans. In a loan against property, effectively it is giving money to SME businessmen, a small middle-sized businessman, based on the mortgage of a property which he owns. So it is shown as a loan against property, but effectively it is to fund the business of that business or that businessman. So in that sense, it is not really a housing loan.
Mr. Mistry, let me focus a little bit to the real estate market per se. What's your sense of the stability or lack of that in the real estate market? And a linked question, have you made any progress on your plan to get into the stressed real estate segment?
No, not yet. Nothing has rectified in that. This is when we said that what we raised capital for, we said a variety of things, and one of the things we said was for deployment in the stressed real estate space. But that is, we said at that time itself, is not something which would happen over the next 1 month or 3 months or 6 months, but over a long period of time. We do not, unlike banks, we do not raise capital every 3 or 4 years. So when we raise capital, we have to take into account our requirement for capital over the next long period of time, probably 8 to 10 years or even more than that. So over that period of time, definitely we will look at the stressed real estate play. We are working on it, but it's still very much in the formative stage. So it's too early to tell you when we will be able to start that business, but it will be done through a separate company or through a separate entity and not done directly through HDFC whenever it is done.
And your sense, sir, of the real estate market, whether it's managed to settle down after RERA and GST related disruptions?
I think markets have builders have got adjusted to RERA. RERA is no longer the big worry that it was for property builders way back in July, August. So I think most of the mid-sized and the large developers have got adjusted to RERA. GST does have a little bit of a complication because GST applies to properties which are under construction. So therefore there is a little hesitation that customers have in buying properties which are in the process of getting constructed. Once the property is ready, then people look to buy a house.
Okay, Mr. Mistry, 2 specific strategy questions. One is whether you're still interested in Canfin Homes. I know that deal is still not concluded. It's been reported that you were interested. Is that something you're still pursuing, sir?
We are not specifically interested in any one company. What we said is that we are open for any kind of acquisition in any of the businesses that we do. So we said that housing finance certainly could be one of the businesses where we could look at acquisition. Health insurance is something we could look at acquiring. It could be something in the life insurance sector. So we have varied businesses. Apart from the mortgage business, we have a life insurance business, an asset management business, a general insurance business, and of course we have the bank. So in any of these businesses, if there is an acquisition opportunity, we would like to look at it. Now, without getting into specifics of one company or another company, if there is a good acquisition opportunity at the right price, you must note that it has to be at the right price, then we are happy to look at it. It has to be at the right price and it has to be the right quality of company.
In general, in health insurance, sir, which you mentioned, any updates there? And would your build out in health insurance have to be organic because you're sort of late into the market?
It does not have to be organic. It does not have to be inorganic. It can even be organic, but organic would take more time to sort of establish ourselves than an inorganic growth. So we are open to look at both. Inorganic growth makes sense at the right value again. So we have to look at opportunities in the health insurance space. If we can get an opportunity to buy something at the right price, at a price which makes sense, which within a couple of years generates the kind of return on equity that we would expect a business that we do to generate, then yes, we'd be happy to look at any acquisition. Otherwise, it would be through organic growth. But it would be done through HDFC Ergo, not directly through HDFC.
Got that, Mr. Mistry. Thank you so much. Always a pleasure to speak to you. Keki Mistry of HDFC Limited there, giving us a sense of the drivers for the housing finance market in the new financial year.